and gentlemen, we're floating in space.
Yo, what's good to the trading community? This is GM Pip Guy, and we back with another banger. It's been a minute since I've been on the channel. Sorry, y'all. I'm still trying to stay consistent. I've still been recording my content. Just ain't got a chance to edit it. So we're gonna get right, and we're gonna drop this banger clip. I got some real important stuff I need to talk to you guys about. You know what I'm saying? I don't want y'all to be confused when y'all watching my videos. So we're gonna talk about a little bit of terminology today. Okay? We're gonna talk about accumulation and distribution. We're gonna talk about, you know what I'm saying, redistribution and reaccumulation. I briefly spoke about it in one of my last videos, but I didn't really go too hard on the topic. So in this video, we're gonna kind of hit home on that. You know what I'm saying? Make sure you guys get a good understanding of what a buyer and what a seller is in this market. And yeah, I just speak about the trade that I got because playing out for this week. So I still been back testing my system, and there's also a new update that I'm gonna give you guys. So basically, there's been changes to the system, right? There's been updates in the world, and I am refining my system a little bit deeper. We need to see prices above 200 EMA. We can do this either at the 50 or the 200 EMA. And while we're doing this, we're staying out of the shitty price action, and you know what I'm saying, we're getting good trades and the things that we want to see. When the market shows you that it's breaking down two bearish lows, more than likely it's gonna go bearish, right? And then boom, prices break down and they go bearish, right? This right here is constitutional reaccumulation. And basically, all of this price action came from these two demand zones that we see, right? So if you were trading in a way where you could just trade off of this demand zone and this demand zone right here, then your chances of being profitable will be much, much more probable. You feel me? This is basically how, you know what I'm saying, our market typically moves. On my experience, you know what I'm saying, it's not financial advice or nothing. This video is just for anybody who may want to learn how to trade for real. If you really want to learn something, lock in. Take your notebooks, get your tablets, get your pens and papers, all that, bro. Basically, there's been changes to the system, right? But everything's still the same. But there's been changes to how we look at the conditions of prices, right? And while we're doing this, we're staying out of the shitty price action. And you know what I'm saying, we're getting good trades and the things that we want to see. Well, that's just everything I speak about. I'm just gonna stop, pause, and speak about it right there, so you guys get an understanding. So, a demand zone, right? A demand zone is basically a down candle before up candle, right? So a demand zone is basically just a down candle before up candle. Matter of fact, I'm gonna draw a couple of these out with this ghost feed, right? So boom, yeah, let's say all these were down candles. The market is still going up. The reason why is because there's a down candle before an up candle right here, which creates basically this whole entire area. Look at this, is creating this demand zone for it to go higher. So boom, when we see stuff like this, bro, this right here is the start of an accumulation. And we see how we see down candles stacking up inside of here. See another bullish candle, boom, it didn't quite close, but it did close above these highs right here. And the moment we close above them highs, it's telling us that prices could potentially go higher. And it created another demand zone right here. And it can keep breaking up or want to go down if it wants to. But normally this is how the prices move. So there's inefficiency that needs to be filled as we see multiple demand zones going up higher into these levels up here. So, you know what I'm saying, there is possibility that prices could do this even and come back up, but the likelihood of that is very less likely. You see, even with the ghost feed, they're showing consistent candles all the way down, and then as prices break up, it seems like with it, like it's not that it's not that probable, right? So the ghost feed, it interacts with like real type price action. This right here is constitutional reaccumulation. Basically, we just went over. We want to go a little further in there. We can see this accumulation turned it into a reaccumulation right here, right? And it's a reaccumulation because the market had to stop and it had to pause for it. It had to pause and gather itself before it could go significantly higher. Reaccumulation for it to go significantly higher, right? But at this point, the market has already proven itself to where it wants to go. There's no reason to deny that this market is not bullish because we've seen confirmation of that, and we've seen how prices can react wildly and in an unprobabilistic way and still become a bullish market, right? Because this is just how prices move. This is what markets do. It might sound kind of confusing at first, but if you just watch it back, you know what I'm saying, watch this video back, you kind of understand what I'm saying for real. everything that I do is still the same. We are still looking for trades in the way that we look for trades. We're still looking at structure the way we look at structure, and we still look for the same confirmations, right? But the only thing that is changing right now is the way that we look for the conditions of price, right? So if these conditions are not met, then there's no reason for me to look at this market. There's no reason for me to even be thinking about taking a trade on it because it's fucking shit. And I know this, right? Because I've tested it and this is what is true. So, you guys, we need to see prices above 200 EMA. We need to see prices above the 200 MA, and we're gonna buy stop that first box that we see break that 200, right? So boom, we break 200 from the start of a trend, and we're gonna buy stop that first box that we see. We can do this either at the 50 or the 200 EMA, and the 50, we have to be cognizant of it. We took it out of the way that I was taught the system was with the 50 and the 200 EMA, but we took this out of the system and we refined it a little bit more, right? But we still have to be cognizant of what the 50 is incorporating inside of the system, right? So the 50 is going to be showing us an area where the market is destined to pause or whatever. Or it's not destined to pause, but showing us an area where the market should pause, right? So boom, we can see prices moving up in the area or moving down in the area, right? So let's just say it was moving down. So boom, prices are moving down, and we see prices trading, and we see prices break under the 50 moving average, right? After we break the 200, right? So we break the 200, and we'll sell stop that first box, right? So boom, that's the whole idea of it, and we can do the same thing with the 50. We get below the 50 and we sell stop that box, right? We sell stop this box, we sell stop that box, and sell stop whatever boxes you see under these price actions. It's gonna be showing us volume. It's gonna be showing us everything that we need to see. It's gonna save us a whole lot of time. So, what I'm trying to say is that boom, once we break above that first level, then this is good entry criteria, right? Or let's say we didn't want to get in at the level because we know that we don't have to rush anything inside of the way that we trade, right? So boom, say we didn't want to get in right there, and we wanted to see prices expand a little bit more before we see the entry, right? We want to see the market prove itself. So boom, prices expand, and then they get to a level, the next level that we were looking for, and boom, after we get to that level, the market pauses. So boom, at this point, when the market pauses, we're good to take another entry, right? We don't want to take this entry if it's coming to this level and we expand past this level. If it expands past the level, then let it expand. We're not getting the entry. If it goes to this level and it stops before it and it breaks down right before, or it breaks down and it pauses right there, that's still equivalent to showing us that prices are going to break past that level, right? So it's a win-win altogether. And whenever we see prices expanding, we should let them expand. And whenever it's time for them to retrace, we should look for more opportunities to be involved. So, yeah, that's pretty much it, you guys. Let's speak about a bearish example. And basically, all of this price action came from these two demand zones that we see, right? So if you were trading in a way where you could just trade off of this demand zone and this demand zone right here, then your chances of being profitable will be much, much more probable. You feel me? This market seems like it's just dead and dull, but it's still bearish, right? Why is it bearish? Because the market has shown us that it wants to go lower. Once here, as it broke below these demand zones, right? And we came up and we made another low, another bearish low, another bearish low, right? And then we came and we broke that area right there. From the moment that we broke that area right there, we knew that we were bearish. I'm not drawing this shit out to like I didn't know that the candles were I was gonna draw it out like this, or I didn't know that the candles were gonna be at the place they were gonna be at. This is just, you know what I'm saying, after time and time again, after seeing it. So, boom, prices could break down, or they could keep going up, right? And we see more price action coming in, showing us that it wants to go past these lows, but it's not getting past those lows, right? So, it's breaking, and it's creating highs as well, lower highs, right? Lower highs. So, let's just say the market wants to fall off the face of the earth, right? Let's go on this price action a little bit. I'm trying to get more candles to pop up on this though. when the market shows you that it's breaking down 2 bearish lows, more than likely it's gonna go bearish, right? And then boom, prices break down and they go bearish, right? Why? Because it's broken bearish lows. So boom, we see another one. And look what happens when we break another bearish low. Look what happens when we break another bearish low, right? Even on the internal side, when I say internal price action, I'm talking about like the price action that's on the inside, right? Because we have markets that move in waves, right? They go higher and they go lower. They go higher and they go lower. Go higher and they go lower. On the inside, it's going up and down, 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 in between that. You feel me? So this is what that means. So boom, that's what I mean when I say that inner price action. So boom, we're not gonna do the inner price action. We're gonna do the main structure. And look what happens when prices break that structure. I already told you guys that once prices break right here, it's going to show us that the market's going to fall. So at this point, this whole idea of what I was telling you guys is a redistribution, right? Or it's a distribution. I'm sorry, it's a distribution. And boom, once prices broke below that, they gave us a supply zone, and prices fell. And these boxes that we see right here became a redistribution because they took more time. And boom, you know what I'm saying? They still created bigger moves. So it's showing us redistribution because it took like a lot out of the market to make it fall in the way that it did, right? Pretty much went over what a reaccumulation is and what a redistribution is. And on the redistribution side, we have not demand zones, right? But we have supply zones. There are no supply zones right here forming for this pair, right? Let me go like this. I'm gonna black this out real quick. All right, so boom. Let's say we were on here and then prices decided to fall in the way that they did. So boom, what a supply zone would look like is basically an up candle before a down candle, right? So boom, you know what I'm saying? The up candle will not be this bearish candle right here, but it'll be this bullish candle. Boom, that was the up candle before the down candle. And very simply, that becomes our supply zone. And prices, you know what I'm saying? They don't have to return to the supply zone. They don't have to return to the supply zone at all. But as you see, we have, you know what I'm saying, another one right here. Boom, prices break up and they fall down. Boom, prices break up and they fall down. The moment we broke past this supply zone, prices showed us that we could possibly be bullish, right? So this is basically how, you know what I'm saying, our market typically moves. On my experience, you know what I'm saying, it's not financial advice or nothing, but you know what I'm saying, like, this video is just for anybody who may want to learn how to trade for real.